Hello and welcome to this edition of Closing Trades right here on ET Now at pretty much the low point of the day. That's where we're currently at, a good 1% lower to 50 points of a knockoff coming in for the Nifty. And the breadth of the market as well is under pressure. Sectorally, cement, FMCG, automobiles, oil and gas and technology are your weak links in the market. And chemicals and banks are the ones which are relatively a lot better. So Ultratech Cement is down about almost 3%. ITC is a big laggard. M&M has pretty much undone all of yesterday's gains and the stock is lower by 2%. ICICI Bank down 1.5%. Axis down nearly 2%. Bajaj Finance down 1.6%. And Tata Motors, which is also knocked off about 2%. But on the flip side, an IndusInd Bank is holding up 3%, Geo Financials is holding up, and then Trent is another name which is looking up in the green. But Srishti, what about the newsmakers today?
Well, yes, a lot of newsmakers on the back of the earnings. Firstly, let's talk about that. TTK Prestige is the counter that has come out with a very disappointing set. Just 4 crores in the bottom line is what the company has reported. See, almost a 9% cut coming in on this particular stock. Other than that, Info Edge did also come out with its earnings. This time, there has been a substantial jump in their profit figure, but that was actually supported by an exceptional gain of over 200 crores. Other than that, operationally, there has been a decline in the numbers, with EBITDA declining 9% on a quarter-on-quarter basis. That stock is also down almost 1% as we speak. Other than that, it's Geo Financials, which is one of the top gainers in Nifty 50 right now, after the company announced that they have received a SEBI certificate of registration for, and a go-ahead rather, for Geo BlackRock Mutual Fund, and that stock is inching higher with a 3% jump, and especially the jump after coming in when this news did hit the bourses. Other than that, Varun Beverages is another counter that is in focus on the back of Goldman Sachs initiation. And lastly, Interglobe Aviation. Well, of course, after that block deal, still under pressure. And within the earnings pack, Schneider Electric is also one of the other counters. After a stellar set, the stock has been holding on to good gains in the trade as we speak right now. So these are the newsmakers that we're tracking at this point in time. But what to make of the markets and where are the big trends shaping up? Let's try to decode that with Mr. Varun Sabu, Head of Equities at Anand Rathi Share, joining us on the show right now. Hi, very good afternoon, Mr. Sabu, and thank you so much for your time. Firstly, give us your sense on the markets. For today, it's been quite a volatile day, but off late in the past 1 or 2 months, we have seen good gains on the benchmark indices. Give us your sense on the markets and the key themes that you're picking up.
Yeah, hi, thanks, Irina, for inviting me to. As regards to the markets, we can avoid today. Today is probably very close to the expiry. And expiry and the movement, this is quite natural. These things keep happening in terms of how the options, open interest, etc. are placed. So we can avoid this for today. But yeah, if we have to see the last few months that we've been seeing, markets have been pretty resilient. They've been on a one-way upward trend. And I don't see things changing at all from here also. This is one of the most unique times when we're seeing so much concern, so many different moving parts globally, right? In terms of trade, how that's going to move, in terms of the geopolitical situation, how it is globally. Things are quite there's a lot of volatility which is happening globally. But if we have to consider India, at least our economy is dependent on the domestic part, the domestic consumption. We are pretty much self-reliant, and that's playing out, which is visible also. If you see the earnings season which went by pretty well. Most of the companies have reported decent, healthy performance. We have not seen any such impact coming, despite so many concerns being around. So I don't see any narrative changing. In fact, if we are seeing anything, government spend picked up big time in the last 3-4 months. We saw infra spends happening at a pretty high pace in the last 3 months. We saw consumption numbers coming out to be pretty healthy across autos, across any of the consumption side that you can see. Things have picked up materially. So things are looking pretty up. There's no change in how we are seeing things. In fact, if anything, I would expect consumption only to go higher from here, considering the fact that there is a lot of hope around RBI cutting rates further. So we are in an interest rate cut cycle, which is on. That should keep playing over. We have seen this 12 lakh rupee tax change which happened, and that is yet to flow down, that is yet to trickle down, that is yet to show in the numbers, which will start happening. in terms of consumption. So consumption is a big theme that doesn't change at all, and we are remaining pretty bullish across all consumption items that are there. Particularly, if I have to name a couple of ideas which are looking very strong to me, Imami is a name which I'm very positive on. There's one company which is taking the right call, right steps. They are building their base for a long term. They're going on either acquiring brands or they're going on doing brand extensions. There's one time when in the last 4, 5 years, 7 years, I don't remember any new brand in consumers coming up, right? They are doing that. They're taking a pole position in that. So there's a great time to look at adding this company, which is now at about 25, 26 times earnings. In consumers, is probably one of the most reasonable names, doing the right things with a longer term view. So Imami is a good one to look at. I would be very bullish on a name, on Escorts as a name. Again, in tractors, one of the companies which is doing the right stuff. It has a Japanese partner. Their products have just started flowing in. They had one of their tractors coming in, which turned out to be very well. They have already on their con call, they've mentioned that a number of products are going to flow down. Those things will play over there. Plus, you're seeing monsoon already starting, rural picking up materially. So this is also looking extremely attractive to me from that perspective.
Say that 137 is the count that you have currently to the declines, and the breadth, of course, is skewed largely in favor of the declines as we speak, as opposed to advances. But Varun, this entire disconnect or dissect between what the large caps have been up to and whether you're safer over there or not, and that mid and small caps are still looking frothy when it comes to valuations. Does it really make sense to make that kind of distinction in this market, or do you think it'll be a lot more about individual companies?
See, we had a very strong 3 year run before we saw that correction phase of 7, 8 months, right? And that 3 year run was all about mid and small caps. There was a very sharpish rally we saw across names. There was so much euphoria which got built in and where valuations got stretched, particularly in the mid cap space. I don't think so that in the smaller cap space we see that kind of froth being there, right? Now, once market is coming out of that 8 month period of correction, it's always the first leg would be in the larger caps, and that's what we saw, where value was also there. Valuations weren't stretched that much, and hence we saw the first leg of rally coming here. Still, the disconnect is there where people keep talking about mid caps still being a little more on the expensive side. But I think they have gone through that correction. Their valuations will always be slightly more or a little more than the larger caps because the kind of growth they provide to you, the kind of base they're running at. And I don't see that changing. So, for example, in the IT space, mid-cap IT space is going to be at 30 plus times. That doesn't change. While your larger cap IT space is coming closer to 20 times now. But that's because of the growth rates that they're providing. I don't see an Infi or a TCS giving you a 5% CC growth any quarter, while that you keep seeing often in Coforge or a Persistent. And that's where the difference lies in the valuation. So it's the peg which matters, and that lies very strongly in the mid caps. And I don't see a reason why mid cap shouldn't rally. They have gone through that time correction or a proper correction also. And this could be a good time that things would start picking up there as well.
Right, okay, that's the take coming in on, the dissect between large caps and, of course, SMIDs. But Interglobe Aviation, that's one stock which has been languishing today as almost 6% of equity changed hands in 2 block deals. What really happened? Kanishka is here with the details.
Well, Rakesh Gangwal, the co-founder of India's largest airline Indigo, and his family trust are seeking as much as 11,385 crore rupees via block deal from an upsized stake sale of 5.7% stake. Via block deals, this is what we are picking up from reports. Now, this comes as the billionaire continues to reduce his holding in the operator Interglobe Aviation. Gangwal and the Chinkapu Family Trust are selling as many as 22 million shares in the block deals. This is what we are picking up from reports. Now, just to give you some background, as of March 31st, 2025, the Gangwal family held a 13.5% stake in Indigo. Now, the latest planned sale represents another step in their phased exit from the airline, which Rakesh Gangwal had co-founded with Rahul Bhatia in 2006. Now remember, just 3 years ago, their holding was was nearly 37%. In August 2024, they sold 5.2% stake for 9,549 crore rupees. And prior to that, in March 2024, they sold 5.8% stake that fetched 6,786 crore rupees. Sobha Gangwal, in fact, exited the company completely, offloading a 4% stake in August 2023 for about 2,944 crore rupees. Now, given all these developments over the past 3 years, analysts have pointed out to how Indigo has adopted a different operational strategy after Peter Elbers joined the company as CEO in September 2022. This was after Gangwal exited the Indigo board in Feb 2022. Now, if you look at the shareholding pattern, as of March 2025, Interglobe Enterprises remains the largest shareholder in Indigo with a 35.7% stake. The Gangal family, through the Chinkapu Family Trust and Rakesh Gangwal's personal holdings, they collectively own about 13.5%. That's 8.2% via the trust and 5.3% directly. Institutional investors also continue to have a significant presence, with FIs holding about 25% and DIs owning 20% thereabout. The public shareholding stands at 4.8%, while the government holds a minimal stake of 0.07%. Now, as we said earlier, this distribution does reflect a gradual reduction in the promoter holdings, particularly by the Gangwal family.
All right, thank you so much, Kanishka, for getting us all those details. But Varun, give us your take on Interglobe Aviation, because yes, of course, the promoter selling the stake has been one of the key overhangs, and now believe that post this block deal, there must be 7 to 8% stake still left with Gangwal and family. But given the fact that the stock is available 2% cheaper today, give us your sense on Interglobe Aviation, and should one be a buyer at lower levels?
See, we don't have active coverage on the name, so I'm clarifying this so that my views are taken with a pinch of salt. But just to mention, it's one of the best airlines in the country. They are the leading player. I don't which is there, and which might be an overhang which is there, but that was the same case about 6 months back or a year back, and still look at the stock performance the way it has been. It's just the way the earnings have been, the way they have been growing their entire business over time, and the kind of market share they command. It's literally the entire market they're commanding now. So I don't see that changing. This could be an opportunity with a longer term perspective because of the kind of run up the stock has already seen. Probably one should time it better, is what I would say.
All right, so that's the take coming in on Interglobe Aviation, though not in the active coverage list. But well, of course, very mild recovery that we are seeing on the benchmark indices, at least for Nifty Bank, is what we can say. And in the last 15 minutes or so, heavyweights like HDFC Bank are seen to be picking up some bit of a steam. But moving on to another news, and in a positive development for PSU shipping companies, we are learning from exclusive sources that the government is mulling a status upgrade for 2 players, Goa Shipyard and Cochin Shipyard. Let's go across to my colleague Prakash, who is here with more details on this one. Prakash.
It's a very positive development for PSU shipping companies that the government is likely to upgrade the status of Cochin Shipyard Limited and Goa Shipyard Limited. A very significant development coming in. We're given to understand that the Finance Ministry is actively considering the proposal, as both the companies are fulfilling all the necessary criteria for a status upgrade. Their status is likely to be upgraded from Mini Ratna to Navratna. A very significant development coming in. Sources tell us that the proposal is being discussed by the group of secretaries at this point of time, and the Department of Public Enterprises will make an announcement. It is important to note that an upgrade in a status will provide greater operational and financial freedom to the company's board. They'll be allowed to make investments up to rupees 1,000 crore without seeking government's approval. In addition to that, the government is also reviewing the status for Ratna categorization to ensure CPSE's performance based as per the status they have been provided.
Okay, Vinay Rajani as well joins in on the show, so let's talk a little bit more about the market with him. Vinay, hi, good to have you on the show. 25,000 clearly seems to be a tough ceiling to break. What are you reading on the charts for the Nifty?
Yeah, so consolidation is still continuing. So 25,116 was the recent high, and that is not able to taken out. So that is the strong resistance we can say on the downside. 24,500 is a strong support. We are, as we all know, that we are passing through the result season. Today is the sensex expiry, Nifty the expiry, and the stocks expiry also there on the Thursday. So yes, there are a lot of events and some consolidation is going on in the Nifty. So as in when we see Nifty going above 25,100 decisively, then we can expect overall trend to resume on the upside. But primary trend is definitely positive. Nifty is holding above the key moving averages. That is a good sign. So overall trend is bullish. We are waiting for 25,100 to be taken out on the upside. Then we may see a good extension of the recovery towards 25,500. But as of now, we are asking our traders to hold on to the long position with the stop loss of 24,500.
All right, so can hold on to the long positions with 24,500 as the stop loss. But when I also give us some sense on Interglobe Aviation, because this is the one of the news makers today, and what we are seeing is that after that block deal that was done, the stock did nosedive, but it seemed to be recovering from the day's lowest point. Help us with the technical setup that you foresee for this stock.
Yeah, so as if we go by the history from April 2025, we have seen that this kind of sell-off twice before this event. So on to be precise, on 7th April it went down, and again on 9th May it went down, and both of the cases it found support on its 50 days EMA. Today's low is also happens to be around 50 days EMA. The 50 days EMA is currently placed around 5,200. So in last 2-3 months, we have seen that 50 EMA acted as a strong reversal point for the stock. When it went down, it took support there and bounced back strongly. Today's low is also 50 days EMA, so there is a strong possibility that they should hold. So 5,200 is a trigger point. Whatever long positions are there in the trading side should be protected with 5,200 stop loss. So primary trend is still positive after today's gap down. 5,200 should be the stop loss in trading long positions.
All right, so that's the day coming in on Interglobe Aviation. But with this fears, it's now time to slip into a very short break. Don't go anywhere. We'll be right back with more, but just on the other side. Welcome back to closing trades right here on Nifty now, and taking a look at the markets. The one of the top gainers in Nifty 50 today is Jio Financials, and this is after the company did receive SEBI approval and a go ahead rather for their mutual fund JV with BlackRock. And Varun, just wanted to get a sense on Jio Financials. Firstly, give us some sense that is this stock in your coverage list, and also how do you see this particular stock given the fact that the experts do highlight that a lot needs to transpire, especially with respect to the earnings. So what's your take on Jio Finance?
Unfortunately, this stock is again not commented. So I will like to not comment on this.
Guessing so, but Vinay, give us some sense on the technical front as well, given the fact that it is the top gainer in Nifty 50 today, and especially that jump coming in post this news.
Yeah, definitely the stock has done well in last 3 months. In the March 2025, it was at 199 and now it is above 290, which is a remarkable recovery from the lower level. Now stock is trading well above its 50, 100 and 200 days moving average. So that clearly suggests that the trend of the stock is bullish on all time frames. So definitely this is one of the outperformer stock and it is into a continuation. There is no fresh breakout. It is into continuation. The previous breakout which we saw was around 280. That was a trigger level. So that becomes the strong support. So I think 280 becomes the support level, and that should be utilized as a trading stop loss for the long position. So it is into a continuation of an uptrend. And once we should have, traders should have stop loss on trailing basis and continue to ride this rally. So this is one of the stock which is looking good, still looking good into continuation, and 280 should be the stop loss in trading long positions.
Let me also welcome on board Shivangi Sarda. She joins in at the show right now. Shivangi, hi, afternoon. What is it that you're making of this pause in the market? 25,000 seems to be like a tough hurdle. What's the indication that you're getting on the Nifty charts?
Thank you so much for having me. Good afternoon. We've seen that, of course, there has been slight profit booking today after the a good comeback of the bulls in the last two trading sessions. But of course, we've seen that there has been a good exponential moving average, which has been respected on the daily frame. Of course, 25,000 remains a juncture for the call writers as of now, but we are heading into the monthly expiry. So, of course, some bit of volatility will be expected. But 24,650 would be an important level to watch out for as a support, which will act as a make or break zone here. Even for the monthly expiry
What did
POV.
you ask, Vijay?
And the upside, we're looking at 24,950 as the next marks for Nifty.
Just looking at a bunch of other movers as well in trade, and let's see what the likes of a Mazgar Dock, a BDL, as well as, a Cochin Shipyard also are up to. The Defence Minister, Rajnath Singh, has now approved an advanced medium combat aircraft program execution model. And that, of course, seems to be beneficiary to all these counters. Bharat Dynamics as well, sitting pretty with almost a 3% gain as we speak right now. In fact, let me take it across to Samir and get more details on all this buzz around the defense names.
In a significant move to develop India's defense capabilities and also to move one step more in the direction of Atmanirbhar Bharat in aero defense space, India's Defense Minister Rajnath Singh has announced the approval of the Advanced Medium Combat Aircraft Program execution. So this program has now been officially approved by the Defense Ministry, and ADA, the Aeronautical Development Agency, is all set to execute this program. Most importantly, this program will be executed along with the industry partnership. Now, Defense Minister has also mentioned in his tweet or the post which he has put on X platform that this will be a very important step in the direction of indigenous expertise. This will enhance the defense capabilities, and most importantly, this will also showcase to the world that in which direction India is moving to defend its borders, not just on land but also in the skies. Now, let me also tell you that this AMCA, the Advanced Medium Combat Aircraft, a full-scale model was shown in Aero Show, which was held this year in Bengaluru, and over there the actual capabilities was displayed of this AMCA. Now, the ADA that put up the full-scale model, and through this, it was shown that this AMCA has the capacity of visual range air-to-air missile. This also had the capacity of Tarak 250 glide bomb. In addition to this, smart anti-airfield weapon can also be there in this medium aircraft as well. In addition to this, the internal payload capacity will be somewhere of around 1500 kg. The weapon that it can carry, the external payload could be of 6500 kg, and several other features. So with this sort of program, India is looking to not just enhance its defense capabilities, but also through the industry partnership, they are trying to be more Atmanirbhar Bharat in aero defense space.
Varun, how are you mapping the entire defense pack? Of course, the stocks have moved a lot and they're not really at comfortable valuations, but do you think the uptick is going to be sustainable?
See, as I mentioned to you, it's all about the visibility of growth, right? And this is one thing coming out after what we have seen recently, that our defense has shown extreme capability, and the kind of order booking that we're seeing and the visibility building over it is significant. Now, today, it's all about the execution, how that plays out. I'm sure companies will figure out a way on how they will deliver on it. But with the kind of capabilities we have built, and these are great order booking stories. So the more the orders come in, you'll keep seeing these stocks getting re-rated. And I think valuations is something which is getting on the richer side, but the hope and the visibility with the next 2, 3, 5 years is very, very strong here. I don't see any reason why these stocks would probably not keep doing well from here. I don't see any correction happening here. These stocks will keep getting re-rated. One of the names which I'm very impressed with the kind of work they're doing, and honestly, doing some more work before it comes under coverage, is Solar Industries. One should keep an eye on that name also. Yet to have formal coverage, but that they're also doing some serious good work out there. Yeah.
That's quite interesting. Shivangi, where within the defense pack are you seeing buoyancy in the charts?
So, of course, the defense space are in quite a lot of action today, and I'm looking at HAL for that matter. We've seen that the consolidation of the last 5 trading days have, come out with a price volume surge today. Now, of course, there has been a lot of tailwind in the entire sector and news about it. But overall, if you look at the monthly chart, this stock has outperformed in the last 3 months. And consistently, we've seen that from the last 12 weeks, supports have shifted on the higher zones. So this one's definitely on my radar and recommending a buy here. Now, there is a lot of long build up that has also started to happen here, which is quite positive for this series. So, of course, this one's definitely a buy.
So let's watch out for the defense pack as well as HAL is something that Shivangi likes at this point in time. But Vinay, also help us with your take on Info Edge, because this was one of the earnings candidate today, and post the earnings, a mild recovery from the day's lowest point for Info Edge. But which are the levels that one should watch out for?
So basically, for last 7-8 session, this stock is trading in the narrow range of 60 to 70 rupees on the upside. It is not going above 1500 on the downside. It is finding support around 1400. So the current level is, you can say it is around 50 and 200 days exponential moving average. And overall trend is bullish only. So there is a good chance that after the discounting the news of results which has come today, I think ultimately it should head higher, because consolidation is there, and any level above 1500, the close above 1500 would confirm the breakout on the charts. So if somebody is looking for the fresh trade, then one should wait for 1500 to be taken out on the upside. Then we can expect some momentum regaining. So above 1500, I would suggest to go long, and primary trend is up. So obviously, medium to long term investors should continue to hold.
Let's check in on what Oro Pharma is up to, because they've said in the conference call that their endeavor is to grow at high single digit through FY26, and that growth is going to be led by emerging markets as well as the European geography, and then margins are expected to be at similar levels for FY26. Varun, now that it's pretty much status quo so far when it comes to the tariff threat on pharma as a sector, where within pharma do you find comfort?
See, honestly, one has to be careful. There's not yet any clarity. Things have just been pushed out. But yeah, I mean, if one has to really build some comfort, CDMO space is the best space to be in. I think that's the space which we would still be having comfort around. So probably names like Divi's and Laurus, etc., are the better ones to look at.
Varun, Divi's has been doing very well, but apart from Divi's and Laurus, any other stock where one can eye at?
See, one of the names again, which is a solid name, and they're doing some great work in the US again, is Sun Pharma. They have also been doing some very good work, and valuations wise also there is reasonable comfort there. In addition to that, the specialty part will always turn out to be a major surprise going forward, right? So any one drug coming there can be a big game changer, and the stock can re-rate materially. So this is one name again which is doing ticking all the right boxes and should be kept on radar.
All right, so let's watch out for those counters. But with this, we let you go on that, Varun. Thank you so much for taking the time out and speaking with us. But for this, let's also get you some of the trading ideas from our experts then. And Shivangi, you go first. Tell us which are the stocks that you're eyeing as of now.
So as of now, first up on my radar is, of course, Tata Chemical, which has started to rebound. And we've seen that there has been good buying interest exactly from a good retracement level. The stock has surpassed its previous hurdle zones of 875 and holding very comfortably above the same, which is actually now acting as a support level. So a clear role reversal has been seen over here. So we've seen that stock has spent a lot of time in consolidation, which means it's getting ready for a good risk reward as well at these levels. And this rounding bottom formation is giving a good scope for a potential upside here. So this is definitely a very well placed stock for a target of 935 and a stop loss of 885. This could be one of the picks. And the second pick on my radar is, of course, from the defense space, which is much in action today. And despite the market volatility, this one space has been quite resilient throughout the day. HAL has been on my radar, and it has come out of a consolidation of the last 5 trading sessions. Even on a week-on-week basis, from the last 12 weeks, we've seen supports have gradually shifted higher, and it's holding on to its key exponential moving averages on the daily frame as well. So recommending a buy here with a target of 5200 levels with a stop of 4950 levels.
All right, so let's watch out for Tata Chemicals as well as HAL. But Vinay, what about you? Which are your stock ideas?
So I would go along in the small private sector banks. So not only Bandhan Bank, but DCB, if you were to go by CUB, DCB, the RBL Bank. So these small private sector banks have been showing strength, and Bandhan Bank is looking very strong. So typical textbook cup and handle pattern I can see on the chart, and stock has surpassed the 200 days exponential average. So overall outperformance is there, and sector has been doing good. So I think Bandhan Bank can be traded on the long side. So if somebody is a trader, then 169 should be the entry level. I would suggest a trading stop loss at 166. On the upside, I'm expecting a target of 176 in next couple of sessions. The second pick I would choose from the real estate space. So that is Godrej Property. So as we all know, DLF announced a very good result and it is looking very strong on the chart. So not only DLF, but the other real estate stocks also showed the great strength in recent past. So Godrej Property has not performed that much, but gradually the technical setup is improving and stock is surpassing resistance one by one. So Godrej Property, I feel should do well from here. So around 22501 can go long. I would suggest a trading stop loss at 2215. On the upside, I'm expecting a target of 2300 in next couple of sessions.
Let's slip into a very quick break. When we come back, we'll continue tracking markets and the last lap of trade this afternoon. Back with closing trades right here in ET now. Getting a little bit weak at that 81,575 thereabout mark for the sensex, the Nifty as well scaling lower, although there has been a little bit of an uptick which has definitely come in. But let's welcome on board Sunil Subramaniam and find out what are his thoughts on the equity market. Sunil, hi afternoon. Done with the earnings season. We've made it to the fourth largest economy, beat Japan as well. And in certain parts of the country, it's been a very early arrival of monsoon as well for the longest time since 2009. What else is going to push the markets higher from here?
Well, RBI's dividend and then the expectation of a rate cut. They already bought whatever 5-6 lakhs crores of liquidity pumped in by the RBI. But with this government receiving this money and spending it, that money is going to flow through the system. And monsoon means that rural consumption will be up on track. Also, the fact that I think that we'll get some good news on the BTA front fairly soon. At least part one of the BTA, I think details will come out. So there are enough good news waiting in the wings for the markets to new fresh highs. There will be volatility because news flows always come both ways. International scenario is still not very comforting. But I think that overall, if you take, say, 3 months outlook, even internationally, my own read is that Mr. Trump will be signing the BTAs with a number of countries. Maybe China will take longer. But I would say that this uncertainty that's currently prevailing is probably a good time to buy because to me, domestic liquidity is strong. And all the good news that you're getting will mean that I see flows into mutual funds and all that strengthening over the next couple of months. So I think liquidity driven market. So basically, to look at it from that perspective, obviously domestic oriented sectors will be a top pick. But I'm saying that for those willing to take a little bit of risk, the tariff related sectors are probably now a good buy starting from now because like I said, the news of a good BTA is not yet there in a lot of prices.
Right, but Sunil, tariff-related sectors help us highlight some because when this news flow related to tariff did kick in, it was the overall markets that fell. Along with that, the export-related counters were hammered the most. But which are the sectors that you should be watching out for crucially?
So if you look at it from the tariff perspective, I think that where we'll walk away with the wins will be in labor-oriented sectors. So meat, textiles, chemicals, leather goods. These are the areas where I expect Indian government to drive a hard bargain because employment generation is key for India. So I think these are the sectors will come out winners. IT, for example, I was a bit negative on IT a few months ago, but now that I see that there's an oversold section of IT. If you take 6 months as a good way to look at it, because 6 months ago is when the FIs started selling. And the Nifty has been roughly flattish. I think about 2% is a 6 month return. IT is down 14%. So
All right, so let's watch out for some labor-oriented sectors. Case in point being textile, leather, and some of the manufacturing plays. And other than that, IT, wherein Sunil was actually holding a bit of a negative outlook, now is turning a bit bullish. Sunil, is that correct?
Yes, that's correct. I was a bit negative on IT because of all the negative news around the US growth and all that. But I think it's been a bit overdone. It's been a 16% underperformance to the Nifty over a 6 month period. And I think that's a bit overdone. And I think it's a good time to start buying because definitely when the BTA news comes out, IT will be something that the government will push for. Not that there's a threat on BTA, but clearly IT as an export oriented was getting impacted by all of this. So I think it's a good time to start buying IT on dips. And like I mentioned, the other sectors being labor oriented, especially I like pharma too, I like chemicals, and I like leather and textiles and all of those things. So while there is a tendency to prefer safety in terms of domestic sectors, and there again, I think consumer durables, again, I think have relatively underperformed over the last 6 months. So that's again a good pick for me because I think the good monsoon, rate cuts, and all of that, that's a sector should get a good boost in the coming months.
Shivangi, what's your reading on the charts for IT? It's been a stark underperformer pretty much since last year and especially since January when all the tariff talk got a little bit heightened and the repercussions of it on the US economy. But do you sense IT could be in for a rebound?
So we've seen that, of course, IT space has been one of the stocks where we have seen that there has been some sort of recovery, but they haven't really sustained well at the higher levels. But of course, there are some pockets which have outperformed, and I believe there should be some wait and watch in this entire space for it to again revive and again gain strength.
Okay, that's the take coming in on the Nifty IT. So far this year, it's lost almost about 13.5%. But sources tell ET now that US team is expected to visit India in the coming weeks and it will have the next round of talks on first tranche of India-US BTA. We also learned that India-US are looking at an interim trade deal before July 9th. Sumita Karir, my colleague, is here with more details.
Right, so a team from the US is expected to visit India in coming weeks, and that's essentially what sources are telling ET now. The team is expected to have the next round of talks on the first tranche of negotiating a bilateral trade deal with India. Remember, India and US are looking at an interim trade deal before July 9th. This is essentially when a temporary suspension on steep US tariffs that runs out, and India is seeking an exemption on reciprocal tariffs on domestic goods. Remember, India also remains protective of several sectors, including agriculture and dairy products. Remember, Trump gave a 90-day tariff reprieve on reciprocal tariffs, so that is about to end in July, and India is expecting to crack a deal before that because you do have the baseline 10% tariff rate that is still continuing, so India is expecting and hoping for that to get lifted as well. This is coming in the backdrop of an Indian team visiting the United States for negotiations that was led by Chief Negotiator Rajesh Agarwal, where he held talks with his US counterparts. And in a diplomatic nudge, the Commerce and Industry Minister Piyush Goyal also visited the United States and met with US Commerce Secretary Howard Lutnick to negotiate that trade agreement. In fact, he also stated that both sides are committed to enhancing opportunities for our businesses and people. Remember, India and the United States are aiming to conclude the first tranche of the BTA by October 2025, given the fact that US is India's largest trading partner. Both sides are also looking at doubling bilateral trade by 2030 to $500 billion.
All right, thank you so much, Samita, for getting us all those details. Definitely, we'll watch out for that. But Sunil, I specifically wanted to have your take on the chemical basket because of late, that theme is picking up. And what we hear from the management till date from this earnings that we have been tracking, they are constructive on the growth outlook for FY26, and some are even highlighting that the margins can expand marginally from these levels. But since it's a vast sector, any particular pocket within the chemical space that is looking good to you?
Specialty chemicals, agrochemicals, given the good monsoon, right? If you include a broader baskets of pesticides and fertilizers there, I think that's good. And pharma synthetics, APIs the fact that China is a big player there means that there is an overhang on the sector. The same opportunity is also there. So I think I'm also reasonably bullish on the overall chemicals pack.
So being bullish on the chemical pack, and just to highlight that Tata Chemicals, Aarti Industries within the chemical basket, these are one of the top movers in the FNO side as well. But the top stock that is leading within the FNO basket is Container Corporation, almost a 4% jump coming in on this counter. Sunil, I'm not sure whether you track this counter very actively, but just a couple of days back, the management did connect with us, though after a very disappointing set in Q4, they're still optimistic that they should be able to clock 24 to 25% margin, as well as their EXIM business is expected to pick up. Give us your sense that how do you see Concor, if at all it's in active coverage list, or your overall sectoral view?
I can give an overall sectoral view because I don't track those individual stocks at all. So, from an overall sectoral view, I think that the main thing which was harming this sector was the negative guidance that they were generally giving. And I think that's now giving way to some positivity. So, I think because of that overhang, I think these are good places to get into. Because I do think that overall, even in the earnings season, I would say there's been a pessimism about the future because of the tariff overhang. And I am reasonably confident that in the coming earnings quarters, the companies will be able to beat the earnings guidance that they have given because they have been pessimistic. So I think to that extent, there is an upward bias in terms of the stock prices, which will move up. And I think broader as a sector, I think this is something that we have to keep it in our radar.
All right, so that's the day coming in on Concor. But with this, let's quickly hear out from the management itself what they really told us on the growth outlook going ahead.
Looking forward for FY26, we see a very good growth in EXIM as well as domestic segments, because EXIM, the import exports are stabilized, and in last Q4 also we saw 12% growth in EXIM in fact, and in this running quarter also we are seeing double-digit growth in EXIM. So we are quite sure that this growth trends will continue for this financial year, and I will like to give guidance of 10% on EXIM growth for FY26. Now talking about domestic, of course Q4 was not very good and due to various reasons, and now in FY26 we are now quite optimistic that we will be able to do quite well in domestic. Transportation of bulk cement, transportation of ceramic tiles, then food grains. These will be basic commodities that we will be moving in a big way in this FY. And I will like to give guidance of 20% growth in domestic in FY26. So overall guidance will be 13% for the company, EXIM and domestic combined for FY26.
Expiry? Which is also perhaps under pressure today is BSE. Remember, the SEBI has issued a final framework on equity derivatives expiry days. There's been a lot of flip-flop on that, and exchanges are now allowed to expiry on either Tuesday or on Thursday, and exchanges must seek approval to change current expiry day. Ankur Mishra, my colleague, is here with more details on this notification.
Market regulator SEBI has issued final circular on FNO expiry days, and it has maintained Tuesday and Thursday as expiry days in the week. Remember, there was a draft circular which was issued by SEBI earlier on expiry days, in which a similar suggestion of days was made, but this happened after NSE had earlier declared that it will shift its expiry from Thursday to Monday, and after that market regulator came into action, saying only 2 days can be chosen in the week, either Tuesday or Thursday, and NSE had to pause its plan of shifting its expiry. But we understand through sources that NSE will apply to regulator shifting its expiry from Thursday to Tuesday, and this will be made as per the final circular guidelines, which enables any exchange to approach the regulator with the change of expiry days till 15th of June. So we understand that application will be given to the regulator, but this matter has already been discussed in the Secondary Market Advisory Committee, in which indication was already made. Scenarios were discussed that what happens if the two exchanges decided to swap its expiry days, but for now the status quo remains for expiry days. So Tuesday remains for BSE and Thursday remains for NSE, but an option has been given to the exchanges to approach regulator on changing the expiry days, and it will depend on regulator to approve that application or not.
Okay, that's the take coming in right now on which day expiry is going to be locked in by the exchanges. So far, of course, we are yet to hear from the exchanges. But Sunil, now that you know the earnings season is pretty much behind us, what's been your assessment on where you saw positive surprises and where you still think there's value?
Like I said, for me, IT, though the guidance was poor, I see value because of its underperformance. I think banks' numbers have been good. They've been very positive, but I see value in the public sector banking space. Those private sector, I think the numbers have been good. The outlook is also good, but more or less in the price. I think public sector banks, they're still not reflective in the price yet. So there's value in the public sector bank packet that I see. Consumer discretionary numbers were disappointing, but again, I see value there because the full growth potential is probably not discounted in the current price. So these are the big pockets in my view. If you have slightly longer term perspective, then the broader infrastructure, building materials, cement, EPC contractors, that space comes into play because there has been a reasonable amount of correction there. It's not going to bounce back in a hurry. So you've got to have a slightly longish outlook there for you to start accumulating there.
All right, Sunil, but within consumer discretionary, the theme that you have been highlighting, give us some sense that which are the pockets that are looking interesting to you?
To me, the realty sector looks very attractive for me, though immediately because of the monsoon, as you know, construction takes a slight down. So I don't expect an immediate number seen. But I think that the leverage of the 1 lakh crore tax giveaway with an RBI rate cut leading along with the liquidity in the system to EMI cuts, the biggest leverage will happen in the real estate sector because that's where a small amount of an EMI cut will lead to a large amount of a housing loan that you can take. So that leads the pack. Auto leads the pack partly because also the agricultural related tractor related sector should do well. Rural consumption boost will see two-wheelers and entry-level cars do well. So auto is a second pick within the consumer discretionary pack. The summer for the consumer durables like air conditioning and refrigerators, summer was hot, but the rains have come in early. So we'll have to wait for the numbers to see how those actually the durables come up. But with the festival season coming through from Ganesh Chaturthi onwards, I see again durables picking up. So to me, consumer durables will come in with a little of a lag. But those are the three within the consumption space, the three sectors that I'm looking at.
All right, well, yes, the early onset of the monsoon, Sunil, I guess is weighing heavy on the cooling segment as well, because we were just chatting today with the management of Symphony, and they also highlighted the fact that there is some tepidness in terms of the demand. But thank you so much, Sunil, for taking the time out and speaking with us this afternoon. Really appreciate that. All right, just a few minutes left for the markets to shut shop, and let's go across to Ashesha, who is standing by with a roundup of how the trading day panned out in today's trading session. Ashesha, over to you.
Well, yes, turned out to be a volatile day for Indian markets. We started off in the red, then touched 25,000 at about 11 o'clock, and then ending the day again lower, nearly 170 points lower, 24,830. We have clearly broken well below that 25,000 mark. Nifty Bank also was under pressure today. That should come up for you on the screens. And broader markets, that too, Nifty Bank down 230 points, 55,350 is where Nifty Bank is currently closing. Small cap index, of course, was holding on with some amount of gains in today's trading session, and mid cap index also ending the day in the green. In terms of individual losers, let's talk about the top losers on the Nifty 50 index. And Ultratech Cement, that was the biggest loser. We had Ultratech Cement, which was down 2.5%. ITC, Tata Motors, JSW Steel, these were some of the other losers from the Nifty 50 index. In terms of individual sectors, we had FMCG index that was under most pressure today. Nifty FMCG index, that one was down 1%. We had ITC, which shed more than 2% in today's trading session. That one should come up for you on your screens. ITC followed by United Spirits that was down 1.5%, and GCPL or Godrej Consumer Products, this one also was down over 1% in trade today. In terms of other individual sectors, IT sector was also under pressure today. Nifty IT index ending the day with some amount of losses. We had HCL Tech, TCS, Persistent Systems, all of these amongst the top losers from the IT pack. But on the flip side, PSU banking stocks were gaining in trade today. We had Punjab National Bank, which was up 1%, UCO Bank and Canara Bank. These were some of the other gainers from the Nifty PSU banking index, which was holding on to some amount of gains in today's trading session. In terms of other individual stocks, let's talk about defense stocks. Mazgaon Dock, Bharat Dynamics, Cochin Shipyard, a whole host of defense and shipbuilding stocks. They have been in focus for the last several trading sessions. Today also, Mazgaon Dock up 2.5%. After Defence Minister Rajnath Singh approved Advanced Medium Combat Aircraft Program exhibition. So on the back of this news, positive news that came in, all of these defence and shipbuilding stocks were gaining yet again in trade today. Interglobe Aviation, after promoter Rakesh Gangwal sold a stake in the company, about 5.8% equity changed hands. So on the back of this block deal, Interglobe Aviation was in focus, ending the day with a cut of 2%. Schneider Electric, strong set of numbers that the company reported. Revenue up 25%. Margins have come in at 14.8%. This stock is also ending the day with gains in excess of 2.5%. So all in all, turned out to be a volatile day for Indian markets. But remember, Nifty is ending the day below that 25,000 mark. Sensex near that 81,500. But that's all the time we have on this edition of the show. But don't go anywhere. Your trade's coming up next.